Alibaba stock is crashing as if there is no tomorrow. Each crash brings in more investors who buy the dip. The stock makes a temporary upward move and then crashes again. This past week, the stock price has plunged more than 10%. The company has reported less spectacular earnings and has toned down its growth expectations. The company also warned that this year the company will miss the analyst expectations for the earnings per share. The stock first plunged on the Hong Kong index and then later on the Wall Street. I posted a video a couple of months ago about the Alibaba stock and warned that the stock is not yet a buy at the current technical levels. Again, I'm reiterating that position with a cautious optimism for the future in this video. We will take a look at the fundamental analysis of the Alibaba stock, a little bit background of why the stock price is going in a downward trend, and finally I'll be doing a technical analysis on the charts. This is going to be an interesting video and please stay until the end. If you're new here, hit the subscribe button. My name is Arshad Ahmed. I'm founder of DIYstockpicker.com, an investment portal dedicated to help investors make intelligent decisions. This video is only for information purposes and please do your due diligence before making any investment decisions. So let's get started. For the record, so far this year, Alibaba has plunged more than 40%, wiping out about $230 billion of shareholder value. The troubles for the company started last year when Chinese government slapped anti-monopoly rules on the company and a $2.8 billion fine. There was so much hype generated when the Ant Financial Group, which is the fintech arm of Alibaba, was going public in Shanghai and Hong Kong. Chinese government officials suspended the IPO offering. The decline of Alibaba stock started from the suspension of the fintech IPO. Recently, Chinese government also announced anti-monopoly rules for companies like Alibaba and JD.com. There was a lot of expectation for the Alibaba Singles Day, which happens in November. The company has not disappointed and has generated more than $78 billion of revenue during the Singles Day, doubling up from the last year. On the other side of the coin, US government officials also require Chinese companies to hand over their financial statements. Failure to do so could result in delisting from the US stock exchanges. That has further increased the selling pressure on Alibaba and other Chinese stocks. In the background of this uncertainty, value investors like Charlie Munger have been lapping up Alibaba shares. Charlie Munger purchased about $38 million of share through his daily journal, which is a hedge fund in disguise. When the shares crashed further, he doubled up on his position. Mohnish Pabrai, the famous value investor and disciple of Warren Buffett and Charlie Munger, also purchased a large stake through his Pabrai funds. Let's take a look at the earnings report that came out. The company has an annual customer base of 1.2 billion users. Just this quarter, the user base has grown by 60 million. The long-term target is to have 2 billion customers on the Alibaba platform. Just imagine about 30% of the world population on the Alibaba platform. The revenue has grown 29% year over year. This is a very healthy growth for a company of the size of Alibaba. There's nothing to complain here. The earnings have increased only 10%. The company is aggressively investing in key strategic growth areas to bring the customers back who are going to other platforms in China. The e-commerce revenue has increased by 34% and the cloud revenue has increased by 33%. There is a huge growth in the cloud business. On a side note, value investors like Mohnish Pabrai and Charlie Munger are seeing huge value and a hidden moat in the cloud business of Alibaba. They are expecting that the business will grow on the scale of Amazon Web Services. The streaming services have increased 14% year over year. So if you look at the earnings report, there are no red flags here. The company is growing at a decent pace for its size. But still, the analyst expectations were higher than what the company was expecting. That is why the stock price crashed after the earnings report. Now let's do a technical analysis on the stock. Let's take a look at the weekly stock of Alibaba. The trend has been downwards for the past 1 year. The stock has consistently been making low highs and low lows. If you see the trend line over here, the trend is completely downwards. The Baba stock is nearing a key technical support level at $138. If this level is breached, there is no support on the weekly until the $85 level. Now the key resistance level to watch is $188 on the weekly chart. So if the Baba stock makes an upward move, it may go until $188 before hitting resistance on the weekly chart. Here is the daily chart. There is a big gap created on the daily when the stock opened gap down after the earnings. We can see the support level of $138 here. If the stock is able to bounce off this level, then the gap may get filled and that will give some trading opportunities on the long side. If you want to take these trades, make sure to monitor the 2-hour chart. The Baba stock is nearing a key technical support level at $138. If this level is breached on the daily, the next support will be at $130. The next resistance level to watch for on the daily is the $158 level. As you could see on the technical chart, the Alibaba stock is reaching an area of confluence, which a lot of traders will be watching for. If the stock breaches this level and goes further downwards, then sellers will further put pressure on the stock and drive it downwards. But if the stock finds support at this level, then there is a chance it will bounce off to the next resistance levels on the daily and weekly charts. At this current time, I see three big concerns for the Alibaba stock. The first, of course, is the regulatory hurdles from the Chinese government. The slapping of $2.8 billion of fine last year and then cancelling the IPO for the Ant Financial Group is a big concern. Alibaba has a huge stake in the Ant Financial Group, and if it is able to pull off the IPO successfully, that will drive up the stock price. There is also the risk of getting delisted from the US stock exchanges. And the third risk on the short term is, of course, breaking of the key support level of $138, which may put selling pressure on the stock. So these are all the risks involved in investing in Alibaba. An investor should be well informed in all aspects of fundamental and technical analysis so he can make the most of his investment. I hope you found the video informational. Hit the like button if you did and share it with your families and friends. I'll be releasing videos weekly and I hope to see you in the next video. Thanks for watching.